Yeah, and what sort of capital are we looking at for like actual float size? Because I know for very short-term, very aggressive systems, day trading systems, typically it's easier to trade with a large. You need a larger float just because the very nature you're getting lots of buy and sell signals. It's going to get chewed through in brokerage. So if you have a really small trading float, it's not going to work short. On a very short time frame for a lot of people with small trading floats. That's why I sort of tend to steer people away, especially if they're new. What sort of float size would you need for something like this?
Well, the first thing I always tell people is, look, if you really want to learn how to trade, you should focus on learning good trading methods first and foremost, because once you master those methods, you'll own them for life. And then when the money comes, you'll be ready. And what do so many traders do? They don't. They do the reverse. They take $1,000 or $5,000 or whatever. They don't know what they're doing. They want to jump in and start trading the next day. And guess what? They lose their money. And so what have they accomplished? Absolutely nothing. And then they do that again, and they do it again. And so they never really accomplish what they really want, and that's to learn how to trade. So you got to do that first. Now, I say that because while there is no minimum per se, however, let's be practical. With ETFs, you can buy one share, just like you could buy one share of a stock. So you could buy a $40 ETF with $40. That's all you would need. But of course, that you can't trade on that. So whether you're trading stocks or ETFs with the swing trading method, I think you need personally at least $5,000. $10,000 would be better to trade, because transaction costs will start to get you too when if you're trading too few a number of shares. But I would never ever let the size of my trading capital dictate the methods that I should and want to learn. I would first again learn the right methods, and then when the money comes, you'll be ready. Or else, believe me, you're just going to go in circles.
Absolutely, 100% agree with you there, Bill. And then I suppose we touched on it earlier when we were talking about your methods, but is this particular method trading both sides of the market, or is it just one side?
Yeah, I typically trade both sides of the market, but when it comes to ETFs, because there are sufficient numbers of ETFs that are the so-called short ETFs.
True. Yeah.
Yeah, you don't have to trade short on the ETF. So our ETF profit driver 4 methods are focused on long trades only, including long trading the short ETFs, if you know what I mean. And we've done that because we think the ETF traders are going to want to be, slightly more conservative than stock traders. And from the questions we got, there are a lot of traders that want to take advantage of down markets, but they're skittish about short positions. So we focused on teaching them how to trade long. You can buy a short fund, be comfortable you're buying it, and as the market goes down, you're making money because the ETF's going up.
I think that's great because a lot of people have trouble getting their head around trading the short side, and despite the fact that 9 times out of 10 you can just about turn a trading system on its head and trade the short side, people still have trouble getting their head around it. And I think by the sounds of things with these ETFs, like being able to trade a fund that is trading the short side for one, and also they're almost not so market specific. Like it's not just the US or just what you can actually trade different funds that are based in different countries around the world. So there's always, like you said earlier, with the stocks, when you're trading stocks or any market really, even in a bear market, there's always stuff going up. It's never. So I think that is fantastic, and I think it's very accessible. Like looking at this trading system that you've developed, it's quite accessible to a lot of different traders, and might lend itself quite well to trading things like in your well, obviously in Australia we call it the super, which is basically your retirement funding. It's the 401k in the States, isn't it?
Yeah, 401ks and IRAs in the States, where the rules are, I'm not sure how it is over there, but the rules here are you cannot short stocks or anything inside of an
That's the
IRA.
same.
Same way?
Yep. Yep.
But you can buy a short ETF. So that's a huge advantage that the IRA people have. As I
Yeah.
said earlier, to hedge, if nothing else, to hedge your portfolio, and hopefully you go further than that and make some of these trades. What I would suggest in the course is you take a portion of your IRA and allocate it to trading,
Yeah.
and supercharge your IRA, because you're going to have it in probably more conservative investments, but you could take a portion of it and really
Yeah.
supercharge your return.
I think that's a fantastic idea, and I definitely mentioned to a lot of my clients, especially my personal coaching clients, that idea of they should be there. Who's going to manage their money better than themselves when when it's their money? You're going to take so much better care of it, and especially when you look at some of the performance that's been happening in the markets, and some of these other fund managers like. Really, you want to take charge of that, and being able to do that through exchange traded funds, and then being able to take advantage of the short side. I know this particular topic, which I wasn't really that familiar with, that you've introduced to me. I need to definitely do some research to find out how accessible they are here in Australia as well. Even that said, though, by the very nature of your trading system, it's not a very short-term day trading system. So I feel like no matter where you're based, even if you are not based in the States, you could still trade the US exchange traded funds and have access to that market and the markets around the world. But are you familiar with how accessible ETFs are around the world?
Yeah, I think of course, I haven't traded in all those different markets, but my research indicates that ETFs are catching on in every major market around the world, and they're kind of following the U.S. growth curve, but much faster. Whereas in the
Yeah,
U.S. it took 15 years for the market to really catch fire. Here, that time frame is just collapsing elsewhere, and it would surprise me before long. The ETFs in Australia trading the ASX
yeah,
would be very, very plentiful. Now, the one thing you got to use good screening criteria so that you don't be trading ETFs that are not liquid,
yeah.
or they look like an electrocardiogram, where the chart's jumping all over the place. You don't want to
Yeah.
do that. You don't want to do that. But I have some recommended adjustments that can be made to those different markets.